All right, so here's a case study. Okay, this is on gold. This is a 5-minute chart right now. Yesterday, remember, I talked about gold having a swing day, and the market came and closed that little zone over there. And that happened at the right hour. And so what I did, this is a 5-minute chart, like I said, and what I did was have an entry yesterday. Today's Friday. That's Thursday over there. All right. And then the market pushed to the upside. Okay. Now, in fact, I also posted that right on Twitter, YouTube, and Facebook. So, and Instagram. So it's on social media. You guys know about it. There were two trades: one gold, one euro dollar. Euro dollar went pear shaped. Gold went nicely in our direction all the way into closing. Now I've closed that trade off, and I've made on top of the euro dollar losses, and that's fine. Today we're a bit of a dilemma. Why? Because gold was a swing day, so I want to follow through, right? But the best way to follow through is, if we'd like kind of got in here, but this was like the Asia session, and today's Friday, and if I take a look at the Asia session, let's just do this. Let's bring this up here, right? This is 5 to 9th of Jan, Friday. Okay, so here we are. That Asia session is 2:25 in the morning, which is right over there, right? 125 is there. So it's at 125, so market takes a dive, and it takes a dive into 320, which is 220 my time. Okay, was it? Sorry, 420. If that's 320, it's going to be 420 my time. 220 is 120 here. All right, on the platform, because the platform is an hour behind, right? Right, yeah. So, and I don't have, as you can see, anything at 4 o'clock. The only hours I've got is, and the only hours I have are 8:50, 10:30, and I added this 12 this morning, okay, and I've made a note of it here as well. Okay, so in the morning I also added this 12 o'clock. But Thursday was on gold a swing day, right? So I want to follow that through, because if this is correct, and this is why I went in yesterday long at that hour once we had a nice price, okay, if it keeps pushing up to the upside, we should be like going in there, right? So I've got two positions. One I've set take profit to, but as you know, I want to take the market up here. All right, so I really want to go into that. I want to like follow this in there. So two things can happen here, right? This can either turn into, because the market was up, at the end of the day, the markets can say, well, this was a swing high, I'm going to push it down, which is fine, okay? And then next week I'll look for a swing day to go to the upside from the lows if that happens, okay? Or it's going to be like, you know what, we are going up, our bias is to the upside, so market comes down, closes the gap. We entered in yesterday, that was nice and easy, okay? Trading hours here. Trading hours, the price was right, let's rock and roll, fine, all right. And then Friday, as you can see, here we are. So if the market pushes to the upside, okay, it should go today, it should go, all right. It's got like drive and push, so it should do it by the time we get to New York pre-trade session, okay. And if that is the case, that's going to break out, okay? If it breaks out to the downside, I obviously don't want to be in that trade. So what I'm going to do, there's no stop loss here at the moment, okay? What I'm going to look out for is that 12 o'clock time, okay? So I'm going to keep my eye on it. But if the minute, if it starts to go pear-shaped, okay, and starts to go down, I'm going to close it off. Then wait for the 12 o'clock. Now, if until 12 o'clock, which is here, it's actually 11:55, but I'm just going to do 11 o'clock here, right? Because the platform, like I said, is an hour behind. I'm going to do 11 o'clock here. If the market mucks around here, okay, then it's, after this, it's going to go up or down. Okay, so that we know. Now, the second way to enter such a trade is on a U-turn, where you can actually say, well, you know what? I am going to wait for the market to break out. Okay, and either way is fine. Okay, I like to do things, I don't like to do breakouts too much. It's for me like there's an A trade and there's a B trade and a C trade, right? Mostly I go for A, B, or C trades. So they're like setups. So accordingly, this is going to break one way or another. And if it does, I don't want to be standing in front of it. If it's boosting up, I don't want to be selling it. If it's boosting down, falling down, I don't want to be standing in front of it. So then I'll wait for the next swing day. But also waiting for a breakout is a legitimate way of entering. And the way you would do that, this is the trade hour, okay? And this is London pre-trade session, this white box here. As you can see, before the London pre-trade session, we had a high here, which is also just below the closing of yesterday. So if I take this, the high of yesterday, the closing of yesterday, and I take the low I did here, all right, then I should be able to enter a breakout if the market pushes to the upside as well. So that's also doable. So, all right, so there are two ways to do it. Because I entered here, if it breaks out, great. Then on the breakout and a pullback on the smaller time frame, I'm happy to add a position. Because if I find myself on the right side of the trade, then I want to push it. And especially if I know it's a pushy day, if I know we've got heavy stuff coming in, then I want to make sure I follow it through. All right, so I hope that helps. So we'll just wait and see. If it goes the other way, we want to close it off immediately, so we're not going to have a big loss, because we don't want to be breaking below here. All right, we don't want to be breaking below there, because if it does break below there, then we've got room to come back down all the way into there. So we don't want to be standing in front of it. But if it breaks to the upside, the pullback at a trading hour, I want to go up again. All right, I hope that makes sense. Okay, like I said, alternatively, you can always wait for a U-turn. We've learned how to do a U-turn. You can also wait for a breakout pullback. We know how to do that too. You could do an impulse and a pullback on a smaller time frame, like on a 1 minute or 5 minute, depending on how the breakout worked out, and so on. So there are options to do so. Okay, but this is just a good case study, because normally what we want to do is buy on the low. Okay, but because I didn't have a trade hour then, I was sleeping at 3:20 a.m. here, right? It's like 2:20 a.m. my time, so 4:20 a.m. my time. Then there's nothing really to do. So now we're going to see what's happening here. But because my bias is to the upside, bullish, I said, okay, this is a trade hour. It's looking sexy now. Okay, so if it's looking sexy, and then we've got energy and drive afterwards, like pushy, then it could still go to the upside. So getting in early is an idea, and then adding a position is an additional idea to follow through. All right, and if you trade with the hours, the beauty about it is this: your stop losses are going to be really tight, and because you're expecting when something is going to happen, and because you've got the trading day information in advance, right? Remember, like our trading here, remember how nice and easy that was, following through. Remember that day, how it just fell all the way down into our zone and then back up again. And now we can keep pushing if it goes in our direction. So just trading with the cycle, nice and easy, no dramas. And if things go pear-shaped, you've got an opportunity to get out quick because you know it doesn't match the hour. All right? Okay, hour and price. Have a good weekend.